Hello everyone, welcome to your weekly Onchain review. This is your host Kai and today is 18th of September 2022. Let's go ahead and look at some important Onchain data. First, before looking into the Onchain, we'll just look at the Bitcoin chart, and I just wanted to show you this, that how Bitcoin has been behaving in the past decade and how we have periods of up only, and you see that roughly they are similar time when the market is in up only condition. Here you see in 2013 that we had 357 days of up only. Then here in 2016-17, if we roughly say 357 days, that's 1 year of up only. And now also in 2021, roughly 1 year of up only since the corona drop. And so what it suggests to us is that in a decade old market, only 3 years have been extremely profitable, and rest of the time it is tough. The market is tough, it is down. People have to learn how to short, people have to learn how to play sideways. So you see this down only is 427 days. It's also about 1.5 years of down only. Now in 2017 also there's 1.5 years of down only, and now also we have completed 1.5 years. And after the down only market we have sideways, and sideways also has considerable amount of time. So when market is like this, that's why you have heard how 99% or 93% of the traders, they lose money, and it is because the greatest opportunities in the market represent only a very small portion. In a 12-year-old market, from 2011, if you take its 11-year-old market, you have only 3 years where you can just sit and you can see your money double, triple, and go 10x also. But rest of the time it is a trader's market, and you have to learn how to play sideways, how to short the market, how to see various indicators, etc. Now you see that we have right now spent sufficient enough time to form a bottom in this zone. If we just look at the timelines of how and when the bottom was formed, so after 1.5 or 427 or 38 days, we see that bottom is put in here, and now this is 2 data points we have, and after that we have this sideways. We can have a double bottom in 2-3 months also, but you get a picture that we have small rallies and in a range bound area. So this can give you a perspective of how to play the market. Now this is the pi cycle, and we have earlier shared this in Discord, and we saw that a pi cycle bottom has been placed in 2022. And if we look at the data of 2014, we saw this bicycle crossover, and there was a 56% drop, and this was the bottom of the bear market. In 2019 we saw the crossover, and then we saw the bottom form after a 47% drop. And here also we saw a crossover and we saw 49% drop. So this indicator is showing that it is probable that this is the bottom. So how I will go with this is that I will show you some charts which show that the bottom is in, and there are certainly some charts which show that there is some more room to go. But in any case, both these theories, they suggest that these are the areas of value. We have also determined that the current zone is actually an area of value through various metrics like long-term holders, SOPR, like MVRV, the PUELL multiple. We have been going through all these indicators week after week, and I have been suggesting the same thing, that this is a long-term area of value, though we can be in a sideways market for quite a bit, and people can get shaken out, and people's money and the money which you deposit or invest in the market, it can be stuck for some time before a good bull market comes. But however, there will be bear market rallies, so you don't want to be late in entering in bear market rallies, because then when it is range bound, when you reach the range top, you don't want to enter at that time, because you will have to go through a time period where your investment is underwater, and it is very hard to hold that investment when you are underwater, and you might exit at the bottom before the rally starts. So you have to play very cautiously. You have to understand that your money can be locked in for some point of time. The best way to trade bottom zones is to dollar cost average and try to enter at range bottoms on lower time frames, which we are doing since past 2-3 weeks. We have suggested that this is the range bottom, you should enter, and this is the range top. We have found swing failure patterns at range top where we have exited. So idea is to build a good cost average in this bottom zone. So this is the pi cycle. This is a fractal which we have seen. Now this is the present era. Now this is 2015-16. So you see how after 33 bars, 33 days, the second higher low was formed. Here also around 35 days, this is in 2018, a higher low was formed. We are forming a similar shape, and we are right now in the process of making a higher low here. This was the low, this is the higher low, low, higher low, low and higher low. So if the theory of pi cycle bottom is to hold true, then this is the fractal of past 3 markets. So we'll look at other charts also of which are suggesting the bottom, and some other charts which are not suggesting the bottom in this video as we go ahead. Before that, I'll just show you this very interesting chart. It was shared by Willy Woo, and this shows the adoption curve of Bitcoin, and it says that in terms of adoption, Bitcoin has roughly the same users as the internet had in 1997, but Bitcoin is growing faster. Next 4 years on current path will bring Bitcoin users to 1 billion people. That's the equivalent of 2005 for internet. So this is a long-term chart which can give you some strength if you want to accumulate. So yeah, so next 4 years, it can, if we keep on following, we have been following it till now, and this is the long-term idea of why you should be accumulating and dollar cost averaging at high value zones. We trust Bitcoin to stay. It's not the same with all the other altcoins, and certainly Ethereum was one of the prime contenders, but after the merge, though it has become deflationary, it has also become centralized, and that is a concern, and for me personally it is a concern. So the trust level on Bitcoin is much higher than all the other cryptocurrencies, and this is the projection for future. So these are the price drawdowns from the all-time high, and we have been following this chart, and we saw that we are right now around 73% decline from the top. In the previous bear markets, we have seen 83% drop in 2018 and 85% drop in 2015. So if we have some room to go, even if it is diminishing returns and diminishing losses also. That theory, we have declining losses. From 85 we went to 83, then in Corona dropped to 77. Right now we have gone to 73. So this suggests that it might be in, the bottom might be in, but there is also a little bit of room, but this also signifies that this is an area of value for long term. So let's look at the present day charts of long term short term holders, SOPR, and this is a chart from last week. We had suggested to our members that we are unable to break above 1, which suggests that whenever we reach 1 at resistance or just cross 1, the short-term holders are taking profit or exiting positions at break-even. We are unable to break this zone from quite a while, and see how the behavior of this metric is in the bear market. We are unable to cross this resistance. You see in 2018-19 how we evolved above 1, and then the bull market started. It means that people are not selling at break even, they are not looking to exit their positions, they are holding their coins and they are anticipating a rally. So that is what we want to see. Right now this is the present day chart, and this is what happened during the Ethereum merge. We shared this chart in the Discord, and we said that short-term holders are selling here. We saw a spike and we saw a dump right after that. So as it went, as they had a little bit of profit just around Ethereum merge, when the bull trap was being set, so we saw people exiting, short-term holders exiting positions, and we saw a dump again. So this is the block chart, and this shows it even more clearly that whenever there is a spike, whenever price rises, people get out of their position. Here also people are getting out, here also people are getting out, here it didn't manage also, people got out in a little bit of loss. So this is the block chart of since the Ethereum merge. I was cautioning members that a lot of profit taking is taking place here at this zone, and this was a bull trap. This was the first move, we went up, and then a lot of selling started here. This was a clear bull trap, and this was a swing failure pattern. This was also showed in my channel on Discord, a clear swing failure pattern, and people were advised to short here. Yes, so now we have seen that how this has posed as resistance till now. We are trying to break it, and break of it we can get a rally. We can expect a little bit of a rally here till here. That's what I'm expecting. Yeah, let's look at adjusted SOPR as the same story, and how we are unable to cross 1 because people are exiting positions at break even. You see this drop, you see her spike, and it was clear indication when I posted in my channel that there is a swing failure pattern and this is a point to short. This was it. This is long-term holders SOPR. We have already seen that when long-term holders SOPR is below 1, we know that long-term holders are experiencing losses. In 2018 they experienced losses for 1 year, around 1 year, and right now it has been in 2012-11 they experienced losses for 184 days. In 2015 it was around more than a year, and right now it has been around 110 days. But what is interesting, which I found yesterday, was that we did put in a bottom after 140 days of long-term holders experiencing losses. We have done around 110 days, so we are getting close. So if this was the bottom, it's not highly unlikely that it could be the bottom, but this is the zone earlier we had put the bottom in, around after 150 days of long-term holders experiencing losses. So another interesting thing in this chart is the spike. So this spike was very relevant. I shared the spike in Discord, and we said that long-term holders are selling here as the price and the merge frenzy was going on. Though the price didn't rise too much, but there was a significant rise from the lows for long-term holders to actually break even and get out of positions. Here you see the block chart. See how big these spikes are in gray. This spike was shared, and you see how here all of this area big profits were taken. Next we have is the MVRV. So we had shared this chart last time, and we have seen how bottom formations have happened, and in the zone we are around the zone. This was 2020 bottom, 2018 bottom, 2011 bottom. So this is the value zone according to MVRV, and this is the present day. We are just around the 2018 bottom. These are the lines which signify major cycle bottoms. So these are the areas of value. So this suggests that we can go a bit lower, but this remains an area of value. Right now we are exactly at the point where corona bottom was formed. And this was a chart shared by Glassnode, and this is showing that how the ratio of spot price and the on-chain cost basis of all investors in the market is depicted. Long-term holders MVRV. So you see this long-term holders MVRV. This color orange is short-term holders, and you can see that orange is the short-term orange is the Bitcoin MVRV ratio, the combined. Blue is the long-term holders MVRV, and this red one is the short-term holders MVRV. So what it shows is that it calculates MVRV considering the cost basis of different cohorts. So for long-term holders are the coins which are owning the coins for more than 155 days. Short-term are less than 155 days. So historically, bottoming formation coincides with spot price trading below all three of the aforementioned cost bases, and MVRV is below 1.0. So Bitcoin MVRV, the average, the Bitcoin long-term and short-term holders MVRV is below 1. So you see 1. So all is below 1, here also, and now also we are below 1, all of the cohorts. So what we have seen is that in the current bear market, it has spent about 56 days in this condition, despite a brief bounce back above the realized price and long-term holder variant. Compared to the typical duration of 190 days below the realized price in previous bear markets, 56 days remains a relatively short period of time in line. So you can see that right now it has been previously it has taken 127 days. In this it has taken 247 days. Right now it has been 56 days. So this also shows that there is sideways and can be possible, and even lower prices are possible according to this metric. This is the PUELL multiple. So PUELL multiple has fallen to its lowest level since November 18. This we showed to you last time also, and sorry, this is the lowest level it has fallen since 2018 November. So also we had told you last time that miners are currently earning just 39% of their 1 year average USD income. So PUELL multiple, what it shows is the daily issuance value and of the new coins added to the ledger by miners each day multiplied by the Bitcoin price at the time in which the new coins were mined. When the PUELL multiple is running hot, that means the new daily issuance value today is high relative to the past year. When the PUELL multiple is low, like it is now, that means BTC is extremely cheap compared to the past year. So, but it can remain in this zone. So, according to this metric, is a high value zone. This is the NUPL, and we have shown you this chart before. We were watching that this is from 2 weeks before, and we saw that how it has entered into capitulation zone, and it tried an attempt to break out from here, but it has fallen back in. This is the last week's chart. You see, this is the red line is the area where capitulation is happening. This is the area where bottoms have been formed. This is a historical bottom. This is 2018 bottom. This is around Corona bottom and around 2018 Corona bottom. This area is of value. So you see this when net unrealized profit and loss, it turns blue. This is marked by capitulation. So same thing we are seeing in this red line minus 0.01. This whole network is under loss, and this is a capitulation event. So capitulation events are high value zones for bulls. This is the present day chart. You see how it has fallen back into it. It tried to escape it during the ETH merge. This spike is during the ETH merge, and right now we have fallen back into capitulation zone. So if we look at the losses, the profit percentage, this is just the profit. The previous one was net unrealized profit and loss, and if we just see the profit of the market, so in terms of max pain, the market has not felt the same pain which it had felt in the previous market cycles. So we have only reached 51.54% of coins which are experiencing losses right now were underwater. In prior, it was around 61, 64 to 57% of coins were in losses, and on only 30%. So you see here 30, 39, 42% were in profit, and rest of them were in loss. So right now 50%, it's 51 to 52% market is in profit right now. So it has to decrease to 39 or 42 if we have to meet the pain which was experienced in previous bear market. So this one is suggesting a little bit lower. So you see that we have metrics which are suggesting that the bottom is in. Some metrics are suggesting that it can still go a little bit lower, but the area remains the area of value. So you can dollar cost average, as was suggested earlier. This is the funding. Funding has been neutral, nothing interesting. It is the same story that whenever we become positive, there is a dump. Whenever we become positive, there is a dump. Now also, as we became positive, there was a dump. So it is easy play if you can control your desires and can short the tops of the ranges, breakouts. It was so easy to decipher a swing failure pattern in the recent dump just by looking at funding. So you see, this is the current funding that was last week's. So here also we went till just this resistance line. This is the only thing which can help you short, and we have been following this from a month now, and previously also during this time also we were following. So you see how easy it is to just short when funding becomes positive. However, what we want to see is that it breaks out from here, and that will be a signal to long when it starts evolving. You see this rally, this rally. We were here also we were under it. Then we saw a huge spike down, and then we started. Even a huge spike down is an indication to buy. So either that or we start evolving above it. This is the open interest. So open interest has been in this downward channel, nothing interesting. It's the same. Open interest is rising slow and steady while Bitcoin price is going sideways. This is a recipe for volatility, as we suggested last week, and this has what we have been seeing. We are seeing this volatility between the range, and right now it is going sideways. So nothing has changed since the last week's assessment. This is it. So it went till this is the present day open interest. It went till the range top. See, this is the last week. Now here, from here we went till here. We saw the volatility. We came back. This is open interest. This is the leverage. We saw this chart and we saw how all of this is fueled by derivative market, Ethereum led rally, derivative rally led rally. So you see how we can't have too much confidence in a market which is not driven by spot, and it is driven by leverage and derivative products. So it went till the all-time high after the drop. This was the all-time high. It formed the all-time high leverage, and then we saw a drop, and leverage also dropped a bit. Still it is pretty high. We need to see spot buying. Fear and greed index, we are at 20, and we were at 20 2 weeks back. Well, now we are at 22, and this is we are at extreme fear zone. Extreme fear is generally a high value zone if coupled with other good metrics like MVRV, SOPR, and other even a lot of technical analysis. So then we can use it, not alone. So this is what we are seeing. We were trying to compare it with this bottom. See here how we saw move down and then a rally. This is a bear market rally, so we'll be watching this. We came above the same chart. This is the extreme fear zone. We are in the extreme fear zone still. These are active addresses. We have been following them, and there hasn't been a great change in new active addresses. This is the demand side of Bitcoin, and we want to see higher highs and higher lows forming in this, which will suggest that there is demand in the network and it is steadily growing. Right now we have seen a decline from the all-time high, and it has been going sideways to down, which is not reflecting strength still. But this can change as a rally begins, as the rally starts. Same chart. Bitcoin monthly return. So we have been following this since months and months now. September is here, and on average it is a negative month. So August was a neutral month, and this has played out. But what is interesting now is that October is coming. So October bottom can be formed in September for these kind of returns. So you see, October and November are the ones to play. So what we are seeing through different technical analysis also is that a bear market rally is possible in these 2 months, and then we can go sideways and do some time correction. But these 2 months is what we want to play, and we're waiting for a good place to enter. And below 20k, 19k, even if you get below 18k, there are good prices, because we have seen that a major resistance above is at 28k. So anything below 19k can be good for October and November. Bear market rally. This is a seasonality chart. We might be here, we might be here. So we have to see if we are forming a bottom here in September, and because we have seen a decline in August also and July also, so we might have done this, or we might be here somewhere where we can expect a good rally in October. So this is September. We are in a decline, but you see end of September and when October starts, we hope to catch this bottom for the rally. So this has been following. This has been happening till now. We saw a dump in August and September. So this can even move. If you just move it a little back, the dump happened in July. So we can be front running this area, and bottom could be formed in September itself. So this chart I had shown you last time. These are the important levels. You can dollar cost average. This is realized price, average price, delta price. If it goes to delta price, it's just a blind buy. But right now also this price here 19,800 and realized price at below 21,500, it's a value zone. So you have seen now this chart I had explained last time that when the price has stayed a touched balanced price in 2018 and it has remained below the realized price for 140 days. Right now it has been around 50 days when we are below the realized price. So this is the realized price, and if you see present, so we are below it, and what we see in this, it's very interesting that historical bottoms coincide with short-term holders having a lower cost basis than long-term holders. So when does that happen? That when the realized price of short-term holders goes below the realized price of long-term holders. So long-term holders realized price is 23.1 and short-term holders realized price is at 24.2 as of now. So you see here, now short-term holders realized price went below, and it was below it for 339 days. It went below here in 2018 and it was below for 145 days. Right now we have not done that, and this matrix suggests we can go lower. So you see there are metrics. So this is what happens. This is bottom formation for short-term holders to long-term holders cost basis. When the realized price of short-term holders goes below the realized price or cost basis of long-term holders. This was 300 days, this was 150 days. Right now we are just trying to make this crossover. So we have this chart in our mind, even if we are looking at other charts which are suggesting that the bottom is in, but this is something which is very, very important and significant, that we might have so much time still left, around a year of it still left. But still we can get a bear market rally, we can go to the range top, we can come down and then get the time correct for a year or so. In 2024, when the halving comes, then it might be fruitful at that time. So these are spot market charts, and we are not seeing too much activity in spot buying. We are keeping an eye on this chart. I'll be updating it on Discord. These are the miners. Miner reserves were falling. We saw huge miners selling. I'll show you this. We saw huge miners selling around these prices since 24k, and right now it has stopped a bit, but this until last 2 weeks there was huge selling by miners. I have shared this chart earlier. This is the halving projection. So here you can see that it is a weekly chart and we are in an area of value on RSI. So that's why we are, we say that this is an area of value, even though we have just seen the cost basis of long-term holders and short-term holders in the chart, and which suggests that still a year is left, and that is quite possible. But we are at an area of value if we look at RSI, and this is where the bottoms were formed when weekly RSI was at this zone. But you see, even after reaching this zone, it has taken a year for the next bull run. Now the halving is around 580 days away, so 550 days away. So that's about more than a year, around 2024. So we have to keep all this data in mind for playing and even accumulating, and how much of your portion of your portfolio you want to allocate to a market which might go sideways for a year and a half or so. And how you want to play bear market rallies, and what amount of money you should be putting in bear market rallies. So I'll just recap of how we are playing the market. So you see how we said when the price reached the range top, then we saw a swing failure pattern. We were anticipating the swing failure pattern. So you see that we can anticipate chart patterns before they occur. And that is where the edge lies. That for shorts, optimum entry will be if we see a SFP at the range top. This is the range top, and we are anticipating an SFP, and then we see that SFP has happened. Now the price has come down from here to here, range bottom. So this was a big short. And how did we anticipate it? I've already gone through SOPR. This was shared live in the Discord. A spike in SOPR indicates potential selling pressure from holders. Currently the metric has a spike. Long-term and short-term holders did sell here. So this was where the traps were being set. Now it spiked a little bit and then we saw a dump. SFP and dump. So this is what we have to anticipate. Strong inflow of old coins. We have seen huge inflow of 2013 coins. I'll share the data in Discord with the members of how we have analyzed that different wallets from 2013 have actually sold, and they were depositing in Kraken, and after that huge deposits, we saw selling at this point, and this drop had volume behind it. So that's a cause of concern. So that's that's it for today, guys. In the end, we can see the Bitcoin chart. We are right now approaching the electricity production cost. We need to go we need to flip this resistance, and then we can expect a rally towards the range top again. Right now we see the spin bar, and what else we see? So this is the projection which I am looking at. We can go a bit higher and then come down again. I was checking for some, if there are some divergences. No, still we can go till here before falling back again. So this has been the state of the market. We are ranging. This ape coin, and I had a scribble drawn here, so it has come down and gone up again. If you see, this has happened here also. So ape has followed this scribble for now. ETH BTC is also following the plan. It has fallen down. Let's look at ETH BTC. So it is at monthly level right now. The Ethereum, after this, just play higher beta coins, and I'm playing Bitcoin right now. So that's it for today, guys. I hope you enjoyed this video, and I hope you are trading mindfully and not giving into emotions of greed and fear, and improving your technical skills. I hope that this video has been of value to you, and I hope I will see you again next week. Thank you very much.